All right, trade recap 2025, 17th of March. It's a Monday. It's also a Monday with no NFP in the week. Rather, it's a Monday with FOMC during the week. To start off things, we had a small opening range gap. Secondly, it's a Monday. Thirdly, conditions won't be so favorable. We're going to be having deeper retracements into fair value gaps, etc. A lot of time spent in fair value gaps. Yeah, so this is me writing down that this is not these are not favorable conditions for today. Yeah, they were absolutely not. But I wanted to see those equal highs getting taken out, and they didn't get taken out because it's a high resistance liquidity day, and things are not going to happen as normal. Instead, at 10:30, we run to the opening range gap midpoint of it, consequent encroachment. And from the opening range gap, price created a fair value gap. Then I actually wanted to see price start running higher to the equal highs. But as you can see as well, I also annotated reclaimed fair value gaps are an indication of a high resistance liquidity profile. Basically, what price is doing in that pink fair value gap is an indication of high resistance liquidity. Shit is not easy. And yeah, so I was seeing price not retracing deeply into this fair value gap, so I had faith in it. So I had a lot of faith in this fair value gap since it didn't have a deep retracement. Basically, that indicates to you that price is weak to the opposing direction, basically. And then price disrespected that fair value gap and then just dropped lower, closed below it, making it an inversion of fair value gap if price were to tap in again and drop lower. So I said now it could or could not run this equal low. The reason I say could or could not is because it's a high resistance liquidity profile and price can literally turn at your TP. Whether it's the best TP ever with like higher time frame targets or anything good, it could turn there. So be careful. So that's why I said it could or could not. Plus, I'm also watching how price is reacting to the opening range gap. So, and then boom, price goes back to that fair value gap, taps into it, making it an inversion fair value gap, from a bullish to an inversion fair value gap, then runs lower at a macro time. Beautiful. But I would have never taken this bullshit since it's on this bullshit day. Also, as you can see, there was a new week opening gap, which was for the current week. So it was strong. Like it was strong. Like in a previous screenshot, not in this video, but another screenshot, I had screenshot that the new week opening gap getting touched and then ran from and then coming back to it again. So that's how strong it is in terms of price and draw. It's when it's fresh, it's strong. So then pairing that with equal lows is just beautiful. So then I annotate that I still want to see those equal highs get taken out soon. I don't know which of the equal high. Oh, the minor EQH, the minor equal highs. I wanted to see them get taken out soon. The reason I said soon is that price swept liquidity, which are the equal lows. So, and we were getting to 11:30, the launch macro, which is a retracement on everyone that made money on the downside and shit. So yeah, That's why I wanted to see them get taken out soon. So yeah, they get taken out. The minor equal highs get taken out, and the relatively equal highs get taken out around the time I said price was gonna retrace on shit. So yeah, basically, yeah. So yeah, but all in all, I wouldn't do shit on this day. Nope. A Monday with no NFP, I prefer sitting on my hands. It's always better to save money than to lose it. And when it comes to trading, when it comes to anything really besides trading. So this is the next day, and this is pre-market. This is the 18th of March, 2025. Pre-market. Bear in mind, pre-market. The reason why pre-market is because on a Wednesday there's FOMC, so the 2 days before Wednesday you want to run them on pre-market. Same with PPI, CPI days. So right here, I wanted to see price run for those relatively equal lows, and it was getting close to the macro time. And yeah, beautiful shit. As you can see, I measured the range, and we were below equilibrium, but the good stuff is coming. Price then trades to the equilibrium, or you could say to the premium, because you should always be buying at a premium or just, buying at a discount, selling at a premium. So price basically did that. Like, I don't follow that rule strictly, because my setup is a setup whereby I either buy at a fucking premium or sell at a fucking what you call discount. That's the shit I be doing, and it makes me hella bread, hella demo bread. This is the same day, and price is trying to run to those relatively equal lows. So yeah, we basically there. I don't even know why I annotated that shit, whereby I said we probably finna run these relatively equal lows. We basically there. So yeah. Oh, since I marked the previous day's closure, I also predicted that after we run these lows, we're probably gonna run to the consequent encroachment, because price opened. I think it was already 9:30, but yeah, price created the opening range gap. So I predicted we're gonna run the lows, then run to CE consequent encroachment. So here we are. The lows got ran, and it was ran using a volume imbalance plus a fair value gap in play. Then 9:30 hits, and we have a opening range gap that's big. It's 124 handles. Something you have learned is when it's a more than 120 handle opening range gap, price is less likely to run to the consequent encroachment in the first 30 minutes. Just like I said, price didn't end up running the consequent encroachment, but we did have some strong displacement lower from the from the opening range gap. But here we have annotations which I made prior to this whole thing happening. So I marked the previous day's candle wick, marked the consequent encroachment of the wick since it was a long wick, and I marked the previous day's it's low. So it's one candlestick. I marked its wick, the half point of its wick, and the low. So yeah, if you are a person who if you're a person who's afraid of exiting or taking profits at the final low or the final target, you could use the halfway point of the wick and shit. But it was a macro time. I saw this fair value gap, and I don't know why I didn't opt to. It wasn't pre-market. It wasn't pre-market. I'm just following my rules. It wasn't pre-market. But overall, the day was smooth. The day was nice. So this is Wednesday, the 19th of March, FOMC day. I don't know why I was on the charts pre-market on FOMC day. I best advise you to never be on the charts on an FOMC day in order to just not lose your funds. But this was not a real trade. This was not a real trade. I was just using the positioning tool just for fun, to act as if I'm in a trade, because I saw this and I was like, okay, this looks banger. So we had this low, It was a macro time and it was close to a new day opening gap. I also annotated the halfway point of its wick. Same thing I do all the time. I had taken a call, and then when I gotten off the call, I saw that this happened, and I was like, yeah, this is FOMC day manipulation. I mean, just look for yourself. It wasn't even time for NFP. It was hours before FOMC. Did I say NFP? Okay. But it was hours before FOMC, and this is what the FOMC day can do. In order to save yourself money, play games on this day. Don't even open the charts. Work on Monday and Tuesday pre-market only. The day after this, don't do shit. The day after, 2 days after this, don't do shit. So on Friday, if it was on Wednesday, Thursday, sit on your hands. Friday, please sit on your hands. These are not favorable conditions. Highly manipulated. So to conclude this video, these videos are for me. They are to track my progress, document my progress and shit. So yeah, so in the future I can watch these and everyone in my family can watch these and see how far I've come, and to motivate them as well to do more. Yeah.